Hi, Elio. Welcome to the Investor Talk. Thank you so much for coming. How are you?
Very well, thank you. Thank you for inviting me, Max. It's a pleasure to be here.
Thanks to you. Thanks
Okay.
again for your time. So let's start talking a bit about yourself, your background.
Okay. Well, my background is I do come from academia, the engineering background. So I do have a background in AI. And after leaving the academia, I started businesses, mainly technical support businesses. And then I started to do networking events. And one thing led to another, and now I'm organizing full-time investment events. So it's fascinating, and I'm happy to do what I do, and I've been kind of uh, lucky to be able to go to different countries and learn from different experiences, and see how they do the same thing, but in um, different contexts, different regulations. But the spirit of entrepreneurship it's always there, no matter where you go. So yeah.
That's right. I mean, I do believe being an investor is one of the most beautiful job. Of course, I'm very biased, but I mean, because it's different. You can talk to so many people, so many different entrepreneurs. It's very nice. I mean, at least for us.
Yes.
Thank you. Thank you for coming. Let me ask you, in which area in geography you prefer to invest?
I think most there are some places like in Africa, there is still a lot of development to be done. But Europe and North America are the markets where I'm most comfortable, and that I have the most knowledge. Uh, Possibly Asia, we do events in Asia as well, so I am beginning to understand more the markets. We're not in LATAM at the moment, but we will try perhaps in a year or two to start to make plans to reach that market as well.
What's the point of view on emerging markets today when it comes to venture capital?
There is in the West there is a lot of um, there are new funds. For the last 5 years, it's been doubled the number, at least in terms of VC companies, new VC companies coming into markets. Other countries are beginning to support VC companies. Countries which traditionally had very few VC companies, countries like Pakistan, for example, Southern European countries as well, they are beginning to see that there is the value of VCs bring to their economies. So they're not no longer looking just at the startup community, but they are looking at the whole ecosystem, how they can support startups to go international, to grow, and to give that scale into, yeah.
Yeah, I'm very bullish when it comes to emerging markets, and I do believe venture capital goes with money anyway. So we need to bring more venture capital funds to make sure that valuations are the right one and exiting are the same, the right one. How much do you normally invest?
Well, what we have for in during our season would be anything from 500,000 to maximum 10 million, which is normally called Series A in Europe. In US, it can go up to 20 million per deal. So no more than 5 deals per year.
So we talk about early stage.
Yes, early stage, at that stage where they already had investments, they've tested the market, and they are looking to that next step.
And
Yes.
what's your approach to follow up investments after we
Uh,
done the first one?
I've collaboration is important. Understanding the market, networking, and if they've been successful in one market, it doesn't necessarily mean they'll be successful in another market. So they need to understand culture, they need to understand the best possible partners for them. So there is the whole ecosystem, which varies, depending on the regulation. Some countries have different regulations. For example, I was talking with a health app where they are looking to provide services in Germany. But the German market has different regulations in what they can do and cannot do. So understanding of the aspects of their growth is important. And as we've discussed even before, just briefly, a lot of startups, VCs do help a lot of startups, but they need to understand that sometimes they need to leave the kind of control, not in a bad way, but someone that has more experience, so they can continue to grow the company to what they actually looking for. So
let me ask you, what are the top concerns and where do you find conviction when investing? For example, the company, the team, the product.
I think, I feel that it does come down to personality, how driven you are, and there is that click in people that it's difficult to show on paper, it's difficult to predict. So the Americans say that is kind of gambling. So you have your intuition, but I think there is a bit more kind of science behind that. It's not easy to find the right people for a business, but how they perform under pressure, can they continue to keep, when they grow a company, can they continue to do what they were able to do when they only had, for example, maybe 10 people in the company, which maybe now is 100 or 200, because that's the scale that the VC companies are looking for. So can they maintain that level of engagement with their customers?
You invest in early stage where team is absolutely crucial. So how important is for you, for example, have a very confident founders?
I've met a variety of personalities, if you like. Some of them are overconfident. Some of them will promise you the whole everything, whatever, they'll tell you everything you want to know, and they'll show you the best graphs, but they cannot execute well, or if they do such in a bad way that they don't make any friends within the community or anything like that. Others will be a bit more quiet, they'll be more skeptical, but usually, normally, those are the ones that deliver the best results. Yeah, because they make less assumptions and they're a bit more realistic.
Overconfidence can be a problem. All right.
Yes.
I just say to everyone, I never see in my life a business model failing. Never. I never had one business model say we are going to fail. But the problem is mostly they will fail.
Yes. Well, even VCs, they only invest in, even their successful rates, it's only 1-2%.
Yeah.
So out of 100 companies that they think are, or don't have a good chance of having an investment, it's still very difficult.
It does. How important, we are coming out from the pandemic, we stretched as much as we can, Zoom, Microsoft, whatever it is, team, and or any other platform for online meeting. How important is face-to-face when it comes to investments, meeting founders in person? And for example, is not being geographically close to a founder a limitation?
I think it makes all the difference. You can find angel investors are usually happy to invest in companies just by meeting online. They do a lot of due diligence, research, recommendations, introductions, all that, all that good background work. But face to face, it's like you can never replace that. And that's what I say to people that do attend or want to attend my conferences, is that there is something that online will never replace, which is that final handshake and say, yes, we'll do a deal today, after they did all the research. So, it's like going to a bank. The bank will not give you money unless they actually meet you or see that you are suitable to, they can trust you, basically. So, as you know, online, you can have a nice background, you can have everything. But that is just kind of the image. So they actually want to meet in person to see if, they can actually do what they say they can do. And and that it doesn't happen. You cannot meet someone within 5 minutes, so you need a bit more time as well. So this is why I say to my events, look, don't worry about coming and listening to presentations. And the most important thing with any event is the networking part. So if you can spend half an hour talking with an investor that is a good fit for yourself, that works both ways, because especially in VC, they'll be together, or they'll be, for at least, 3-5 years. So you need to have a good synergy with your investor.
It does.
So, yeah.
And also the feeling,
Yes.
the chemistry, it's such important stuff.
Yes, it is. I agree. And you can never replace that.
No. No way.
AI can try, but that will, still take many years to.
We are going to the metaverse, but
yes.
again, we are not there. We are not there. We need decades, not years.
Yes.
Anyway, how often do you like to meet the founders, before investing and after?
I prefer that crunch phase. So after doing a bit of research, finding out what they do, when it comes to that final decision, before a committee or anything like that, should they be in the final, let's say the final 5, and that's the time you actually need to meet them, just to find out, a few more things, like I said, intuition, how they react to certain things, because after they've been through all the tests of the company data and sales, and after all that is done, it's at that stage where you say, are we going to commit? And some companies will say that straight away, depending on due diligence. Some companies do it the other way around, but I do prefer to do a bit of more research.
How involved do you get with your portfolio? I mean, and let me ask you, how do you add value if you are an active investor?
Well, I've in my case, because the brand is quite attractive and it's all over the place now, so I don't need to use or to spend too much time researching. That I've been kind of lucky; they actually approached me, so they already did some sort of research themselves. So they they kind of tend to approach, which in some ways, there is no interesting, there is no interested third parties in terms of commissions, things like that, or introduction fees. So it's something that they like to be part of the brand, and they feel that reflects good in their company as well. So I suppose the organic approach is what I've been lucky so far.
Do you need an investment?
At the moment, because the fund, the fund should be completed by the end of this year. So at the moment is more collaboration. So I tend to find partners to invest in. So no, not at the moment.
We do have this startup, for example, you run also events, okay? And what do we do to get startups to the next round? And do you get involved in connecting and helping them to raise money?
Not always, no. Because like I said, with my events, I don't take commissions or introduction fees, which most people tend to do. So I want to be as in the middle as much as possible. So, I want to be a platform where people can come in and I would take no sides. So I don't want to force anyone to go to one place or another. As long as they're both comfortable, I'm happy with that.
And in case when your fund, of course not in case because you have your fund done, when your fund will be ready, and did you get any position when it comes to helping the startups to move to the next round? Let's say you are going to invest in them in an early stage round, let's say seed. Are you helping them for an A round? Because you are very well knowledge when it comes to introductions.
I don't take any equity. So that would be part of the fees, which I don't. So at the moment, no.
Okay. What's your strategy when it comes to creating a portfolio? Do you expect a investment in your portfolio interacting, startups you invested in, interacting in to some extent, help each other?
Yes, collaboration is important. It just depends if they complement each other in different markets. It's difficult to predict if they are a good match to collaborate, because again, it will depend on the people involved in the companies. I tend to facilitate. For example, I know a company into biotech. They came to Zurich for one of my events, and they're actually based in the US, and they're based in Chicago. So I suggested, why don't they come to Boston, which they are coming now to Boston, where Boston is the kind of the biotech hub in the US. I've already have two companies which they are also interested to perhaps collaborate. So I'm already doing some introductions for that to happen in June in Boston. So again, I'm not taking any fees, any introduction fees. I just want them to be successful, which in turn should help my platform as well. So,
what's your take on failure? How would you act when your startup fail if you invest?
Well, it's the European view is different from the US view. So failure is not a bad thing. I thought it was when I first started, but someone the other day said to me, if you are as independent as much as possible, no one could ever stop you, as long as you have enough to keep going, you should be fine. So it does come down to your personality, and failure is not as bad as the perception. So, during COVID, I went to Berlin, did the event there, and we weren't allowed to have too many people in the room because of the German government regulations. And they said to me, why would you run an event with so few people in the room because of the regulations? And I just said, 99% of the population would not even attempt to do it. So I don't see it as a failure. I mean, I see it as success just by being there. It's that 1% that tries to make a difference, which you don't normally see in a lot of entrepreneurs. They just measure things which aren't always the best thing to be measured.
I mean, I do believe failure is equal to experience. Yes, of course, you can't fail for the rest of your life, but when you fail, if you can get up again, you're pretty much well knowledge. You know what you need to do next time. Don't make the same mistake. Now you are raising your VC fund. So my question is, why did you become an investor? Why do you want to raise your fund? Why do you want to invest money?
Well, it's a lot of investors, they see it as possibly competition, but having that belief that you can make a difference. Sometimes there are people out there which will never have any investment, and I see different markets, different people with good ideas, good talent, but I never had that helping hand, because even VCs are limited in what they can do. It's if a VC can only do 10 deals a year, that means that he is leaving a lot, which can be part of the deal flow for some other VC. So people, markets, the world population is growing exponentially. So ideas will never stop. Just it's execution, markets, everything is growing. So, but the VCs aren't growing as quickly as the markets. So entrepreneurs, companies, startups will always exist. And if you spot, I don't know, someone, for example, in India with a great idea, but not many VCs have believed in them, and if you believe that you can make a difference, then if they can make it in India, they can make it anywhere. It's the size of the country and the size of the market. So it's having that international kind of growth that other companies may be looking, because a lot of funds are limited to particular countries, particular markets, particular segments. So there are very few, unless you're talking of the big international funds, but they usually have government incentives and things like that. But countries like Japan, you see Tokyo is fantastic in terms of what they do, but outside Tokyo, the VC community it's almost non-existent as well. So I had a gentleman that came to my event, and he said we need more VCs around the country, not just in Tokyo, which it helps the whole economy, supply chains, research, everything.
It does. Which are the critical points that trigger your decision to invest ultimately?
Um, it's it's um, it's not always the size of the market. Uh, it's the doing well the small things. If they can do very well very small things, and if they continue to do well, then if they can replicate that in a different city, in a different country, and having learned that they can do very well, then it's just a matter of scale there. So it's not the big things, it's the small things. I see a lot of people, they, easy to become arrogant and think that they are the best, but for me personally, it's the small things.
Yeah, I do agree. I mean, doing what is necessary, but do it well.
Yes.
Do it well. That's very much for you because you run so many events and very well known. What is the perfect receipt for a great pitch, if there is any?
That's a very good question. It depends on the audience who's listening to your pitch. The other day, I was talking with someone in Amsterdam, and he said, "I'm the new Elon Musk," or he thinks he is. So it, everyone has a different personality, but VC is still a numbers game. So it doesn't have to be the prettiest slides. It doesn't have to be. It just needs to make sense and to be realistic. You can't claim that within a month you're gonna double your revenue by just doing X. It's you have to be realistic, and at the same time understand the things that you can do, cannot do, and then not just say things which it's just sounds good and nice. They are, or we all are well experienced and to believe what people say, especially new startups where they just use a lot of textbook stuff, which valuations, things like that, which they don't always understand that what matters is what's in the bank. That's what the, cash in the bank, that's king. It's still valid from many years ago till today.
Yes.
It's a profit, and that's the main thing. They look at, you say, well, you can make £2 million in a day, but if you've made £1 of profit, it doesn't. No one is going to invest in you unless you say that you're not wasting any money or things like that. But if you say, well, I've made 100,000 and 99,000, it's all been profit in one day, everybody wants to invest in you.
What about IP? For what I can see, many of them are very focused on IP. They really want the IP be in the company, belonging to the company, developed by the people. And some others of them, they prefer to outsource almost all the IP. How important is the IP belonging to the startup to attract venture capital investments?
It depends if they are credible people, if the investors can trust the people they want to employ or to become partners. It's the whole relationship of trust, credibility, expertise, knowledge. So it's if you have a lot of friends in the company, you can have a nice day, but at the end of the day, what did they do, or how are they made of? diversity, ideas? Can they kind of talk to each other in a way which is not yes and no, or having a lot of yes people around you? You know, how do you generate new ideas by perhaps being critical of each other?
What about the intellectual property? Should the intellectual property belong 100% to the startup, which means no outsourcing at all?
It depends. If you're using, for example, software, which is a programming language which was invented by somebody else, and all you did was just put the two together, how much intellectual property, how much originality there is in that. Yes, it's a nice idea, and you're capable of putting one and the other together, but you didn't develop the programming language, you didn't you just make it look better, or you just made it more efficient. Things like non-disclosure agreements, it's not, doesn't work in practice, because if you don't want to talk about what you do, what you did, how you did things, no one's going to invest in you. And if you make everyone sign that every time, it's going to take you, forever to. So unless if you're looking in state secrets, for example, but outside of that, you have to be as much as you can open, because if you're talented enough, you have to be confident enough that whatever you produced, you can do it better next week or next year, because intellectual property, the intellectual is the part that no one tends to talk about. They only talk more about the property. So that intellect is the valuation, and no one can copy that, So I know it sounds a bit more scientific, but that is the part that investors like to talk about,
It's realistic.
Yes.
That's realistic. What's the suggestion to funders approaching VC?
My suggestion is not to approach them, because these days, communication, data, companies house, everything is out there, VCs have teams of people researching companies, and if you do well, you will be noticed. So don't work thinking of investors. You should develop your company the best you can, and then things will happen. You've mentioned private equity, mergers and acquisitions. If you do well enough, people will start to notice you, and that's the stage when then you may be thinking about that. But when you're just starting, don't think about the investors, just think about doing the best you can, and the best execution, the best company you can have.
Also, because fundraising is such a spending time.
Yes, well, yeah, if you go for meetings and, instead of thinking of focusing in your startup, you're focusing on investors. And at the end of the day, they'll say, okay, what did you do for the last month? And if you say, oh, I've been meeting with investors, okay, but what has the company done then? So
that's completely right, indeed. Let me ask you, and we close our great interview with this. What will be, in your opinion, the most promising sector to start a venture for any founder in the coming years? AI, for sure, it's one.
Yeah. Well, the crypto space is quite popular. But I feel that the environment, sustainability, that's going to grow as well. So its resources will be scarcer. So basic things like food production, yes, the basic things that if if you own a supermarket, you'll never go out of business because everybody has to eat every day. So, but if you have a nice looking car, yes, maybe you had some AI machines to work on the car, but if you don't drive it today, you can drive it tomorrow. But food, you do have to eat it. So I think the basic for the future, I think there is a lot of undeveloped opportunities there still, especially with tech as well, where you could do, you can have science-led food, things like that. So that's yes, there is a lot of research for, coming from that, but that is apart from the AI, and the crypto space and the things that people see as quick turnaround, capital gains, and yes, some people are making and doing very well, but in terms of sustainability for the future and reliability, I think that food environment, it will become.
You've been talking about crypto and inside crypto. What do you think about NFT, blockchain, metaverse?
It's in theory is fantastic, and in practice people are doing very well. It's just that unknown. It's like you're putting. Yes, there are some rules where you can minimize your losses and you can maximize your gains. It's difficult to predict, especially where everything is so volatile. One day you can have £1,000, the next day you could be down to 100. So it's kind of the automotive industry, back 90 years ago, where you had so many brands, and now there's only around the world there's maybe 5. So consolidation, mergers, acquisitions, when it gets to that stage where you have dominant players, I think people like Coinbase, when they kind of tend to be the players in trade or things like that, then you will see a bit more, perhaps the general population.
Elio, thank you very much for coming to Investor Talk. It's been a very great pleasure for me.
Always happy to discuss.
Really, thank you very much. Have a good day. Take care.